Hey guys, Matt Faircloth here. So I'm gonna take you guys on a journey. We're gonna get inside the brain of the DeRosa Group, and this is Kevin Dean. And he does all the underwriting for DeRosa Group. Tell them all about it.
You wanna hear the whole story?
Tell us about your real estate background, where you were and where you're at now.
Sure, so yeah, spent 4 years on the pricing desk over at Fannie Mae. Took a look at a lot of deals. We priced about $200 billion a year. Sort of through the process, started to understand the lay of the land in multifamily real estate, which brought me, to working with Matt here.
Yeah.
And now, my role is primarily trying to turn up opportunities for acquisitions, such as the one we're standing on right now. So I sort of do all the upfront work, finding the deal, underwriting the deal, making sure that the returns work for our investors, making sure, we've got everything covered from a lending standpoint. And then we close on the deal.
I have 3 or 4 things in a multifamily syndication team that you have to be successful. You got to have the person hunting the markets, hunting the deals, which you do,
Right.
Also underwriting the deal and taking the deal, turning it into a business plan. Then you've got to fund the deal, which is finding the money, finding the lending and whatnot, which you get involved in as well, finding the capital. Then there's the hammer, which is what our man Justin Fraser does,
right.
which is taking that awesome business plan that Kevin's created and driving it into reality and creating it. So those are the 4 seats on the bus, if you will, of a successful multifamily team. There's the big things people look for. Well, cap rate,
Right.
Rent, price. What do you think that are some key indicators you look for when you look for a multifamily asset that probably aren't as common but are just as important?
Yeah, well, I guess to start off with the more common things that we look for, the most important thing, we take sort of what we call a top-down approach. So we look at the market, first of all, right? So we want to make sure if we're looking at assets, we're looking at a market that's growing. It's got job growth, population growth. It's got great landlord-tenant laws. We want to make sure we're getting into an environment where we can actually succeed and execute that business plan that we're putting in the spreadsheet. The next thing is, when we're looking at deals, we want to see things that other people who are also looking at the same deal don't see. Right? So I'll constantly tell, brokers and sellers, hey, the more hair on the deal, the better, right? So we're not afraid of aluminum wiring. We're not afraid of loan assumptions. We're not afraid of things that other people may want to avoid, because when we see that, that's when we see opportunity. Yeah,
I'll give you an example before you move on that. We're here in Winston-Salem. Kevin and I, our team, bought a 334 unit that's just a couple miles from here. And we were looking at it, and Kevin found out there was a shooting at the site just a few months before we were looking at it, right? Most buyers would say, well, I don't do major crime issues, right? We know that those things can be fixed, and we were able to fix that, and that property is now flourishing because we were able to remove a lot of the crime issues, right?
Yes.
We're standing here at a 229 unit in Winston-Salem that our company's purchasing. And what are some indicators here, or maybe some hidden secret sauces that you had baked into this property?
Yeah, so one of the things here is that all the utilities are included in the rent, and that's not standard for Winston-Salem. Because utilities are being paid by the property, one option is we could pass those utilities back to the residents. We're not underwriting to doing that. That could be something we do in the future. Instead, what we're doing is we're saying, hey, how do we get the actual utility expenses down? So in talking with some of the maintenance staff here, we found that they haven't actually done a utility saving renovation program. So they haven't put in the aerators, they haven't put in the low flow toilets, they haven't put in the LED lights everywhere. So there's a real opportunity throughout the property to implement some of those items, which we're paying for, not the residents, and in effect should be lowering your expenses.
It's 20-30% typically is the standard for water savings. Like you said, low flow toilets, aerators, LED lighting. I mean, that's about right for a reduction is what we would target, right? Pretty good return, right?
Yeah. So that's one thing there. Another thing that we really look at is sort of how does this fit in the overall portfolio that we're already owning and operating, right? So one of the things I like about this deal is it's got a 95 unit attached to it right down the street. So, if you were just to buy 134 units right here, you would have to figure out how to manage it with one single team just on this property, right? Which could be maybe cost prohibitive, right? As you get larger, you get economies of scale. So in this case, we'll be managing 2 properties combined together, which in effect should lower, the total payroll cost. Not to mention, we're also picking up a lot of economies of scale on the CapEx front and also on the service contract front, because we've already got 336 units down the street. So altogether, we're almost at 600 units in the market. So that comes with a lot of negotiation power and leverage when you're working with vendors, when you're negotiating, hey, you're not buying 5 toilets, you're buying 50 toilets.
Yeah, and there's a lot of leverage you can do in economies of scale. So that's the lesson there, is to think bigger, guys. Think if you're looking at smaller units, think about how you could leverage that maybe with other people you know in a market to leverage buying power, or maybe how you can think a little bit bigger and take down some bigger properties so you can leverage up those expenses. Awesome thoughts, man. What I'm hearing here from Kevin, and maybe agree with me or not, is that you've got to think outside the box when evaluating a deal, because if you're just looking at things on what rents are, what debt's going to cost you, what current expenses are, you're going to get spit out the same numbers that anybody else looking at the deal is. And there's a lot of people looking for deals right now. So if you want to be successful and find deals that work and find deals that are going to pencil out and make money, you've got to, yes, look at those fundamental things, but also expand outside that and find out what can you bring to the table as an underwriter to throw in that special secret sauce to make the property perform and look at things that no one else is looking at. And also, as you said, to address things that have a little bit of hair on them, like maybe it's crime issues, right. Maybe it's aluminum wiring, maybe it's owner-paid utilities. A lot of these things are movable. You can change a lot of those things.
Yeah, I agree. And the one thing I would add to that is not only are you trying to be creative in your underwriting, but you also want to verify that you can actually do those things. You can put anything in a spreadsheet. Yeah. We were talking about that earlier, right? You can say, I want this to show exactly this return over this hold period.
Well,
right?
Just have to double rents. That's it. That's all I got to do.
But one of the beautiful things about the fact that we already own in this market is we actually have solid data to rely on. Yes. We also have a built-out team, right? So we've got an asset manager, Justin, who has great relationships not only with our property management company, but also with the vendors that he's using to actually turn units. So before we even submit, an offer on this property or any properties in Winston-Salem, we're actually going to those vendors. We're going to our property management company and we're saying, hey, what do you think, right? Yeah. And then we're altering our rents, our, expenses, our overall business strategy to make sure that the team who's actually gonna be on the ground implementing it agrees and says, yeah, this is possible. Or, hey, maybe you're not being conservative enough here, or maybe you're being too conservative here. Yeah. And actually, we think we can get rents here. So that's all been done before we even submit an offer on the property.
So think outside the box, but verify that the theories and opinions and hypotheses that you have are correct by using vendors in the markets to back yourselves.
Right.
Right?
Yep.
Final thoughts, man. What do you got? Any final thoughts on underwriting deals, secret sauces, angles of attack to make your offer stand out even, or anything like that?
Yeah, I think a big part of it just comes back to your relationships. And we've spent a lot of time over the last 3-4 years looking at Winston-Salem, looking in Lexington, Kentucky, looking in these target markets. And, you got to get a lot of no's before you get a yes. So, we've gotten, 300 or so no's this year, and then we've gotten a couple yeses, and that's what you got to,
300. We're on a property now that we're going to be closing on, but Kevin's and his team have underwritten 300 properties to get to today. Now, not saying you have to underwrite 300 deals, but don't expect every deal that you underwrite to be a deal that you're going to do. It's okay that the deal doesn't work out. Move on, onward and upward to the next one. So Kevin's the brain of a DeRosa Group multifamily acquisitions. He does the underwriting, business plan creation. He's a DeRosa Group partner, but you also have your own company, which is called
RockBridge Investment Group.
RockBridge Investment Group. Check these guys out. Kevin, been awesome working with you, man.
You too, my friend.
Awesome having you here. And creating another great asset here in Winston-Salem. This is part of a 700 unit property portfolio we're putting together.
That's right.
Here and in Lexington, Kentucky on a portfolio asset. So check that out. If you guys are an accredited investor, you can go to DeRosaGroup.com to hear more about that. And looking forward to this and many more together, man.
Me too, my friend.
Thanks. Have a great and profitable week, guys. Don't do that.
You guys are great.
God.